It is a common question. How many mutual funds should I invest in to get great returns without making things too complicated? Recently, I met an investor who was investing just 30,000 rupees a month across 22 different mutual funds. When I asked why, he said even if one doesn't perform, another will support it. Sounds logical, right? But is it really the truth? Let's uncover in this video. Hi, welcome to holisticinvestment.in, where we simplify the world of personal finance concepts for individual investors like you. So while diversification is important, more over diversification will actually backfire. So too many funds can lead to portfolio overlap, difficulty tracking performance, watered down gains from top performance, and confusion during rebalancing. As the saying goes, even nectar becomes poison if consumed in excess. So what's the ideal number? There is no one size fits all answer, but here's a good thumb rule. 2 funds per financial goal is usually enough. And even if you're investing for multiple goals like emergency, education, retirement, you likely don't need more than 8 funds total. So let's break it down further. So let's break it down based on your financial goals first. So if you have an investment time horizon of up to 1 year, then like for example, let's say a goal of emergency fund, then your suggested fund type would be liquid or ultra short term funds. But if your investment time horizon is for 1 to 3 years, for example for vacation, down payment, then your suggested fund type would be banking and PSU or corporate bond funds. And if your investment time horizon extends up to 3 to 5 years, for example for buying a car or travel again, then your suggested fund type would be balanced advantage and equity savings fund. And if your investment time horizon again like extended up to 5 to 8 years, then for example like your child's education, then your suggested fund type would be large cap, flexi cap, and multi-asset fund. And if you have a goal for which you require an investment time horizon of over 8 years, like for example your retirement, then your suggested fund type would be mid cap, small cap, large, and mid cap. So when your goals are aligned with the right fund categories, you strike the right balance between risk and growth. Now let's break it down further based on your SIP amount, because how much you invest each month also affects how many funds you should hold. Suppose you have a monthly SIP of 15,000 rupees, then your ideal number of funds should be 3 funds. Like for example, you can allocate 5,000 rupees per fund. And if your monthly SIP is 30,000 rupees, then your ideal number of funds would be 4 to 5 funds. And you can, for example, allocate between 6,000 to 7,500 rupees per fund. And if you're investing 50,000 rupees plus for monthly SIP, then your ideal number of funds would be 5 to 6 funds. And you can, for example, allocate between 8,000 to 10,000 rupees per fund. But splitting 1,000 into 15 different funds, not ideal. The returns won't move the needle and the tracking becomes a nightmare. So to make the most of your mutual fund investments, follow these simple but powerful rules. First, don't park too much money in one fund. Even the best one can underperform. Next, diversify across different fund houses like AMCs. So this reduces risk from fund manager bias or underperformance in one AMC. And next, prefer active funds for higher return potential, but only if you can research and track them. If not, go with index funds for low cost, consistent market returns. Next is avoid sector or thematic funds unless you truly understand that space and are ready for long holding periods. And next, say no to every new fund launch. Stick with funds that have consistently performed across market cycles. Next is when your income rises, top up your SIPs in the same good performing funds instead of collecting more funds like trading cards. And a lot of investors jump into new fund offers like NFOs just because they sound shiny and exciting. But before you invest, ask yourself, do I already own a similar fund category? Is this new fund offering a unique strategy? Or are there already strong, well-rated funds doing the same job? If the answer is no, you are better off sticking with what's already working in your portfolio. And if you're just starting out, here's a simple, low-stress 3-fund combination. So first is large cap fund for stability and a strong foundation. Second is flexi cap fund for dynamic allocation across market caps. Third is debt fund for short-term needs and lower volatility. This setup gives you diversification plus growth plus safety without being overwhelming. As your investment knowledge and income grow, you can gradually expand your portfolio strategically, not randomly. Sure, DIY investing is cool, but here's the truth. Good mutual fund planning isn't about just picking top 5 funds from a blog. A certified financial planner, CFP, helps you to define your clear financial goals, choose funds that match your risk and timelines, avoid duplication and messy portfolios, and optimize tax and returns and rebalance your portfolio as markets and your life change. Think of a CFP like your personal wealth GPS. You may reach your destination alone, but with guidance, it's faster, smoother, and less stressful. So, what are the final takeaway from this video? Keep it smart, not scattered. So, how many mutual funds should you have in your portfolio? Ideally, 8 to 10 funds is more than enough. Keep it goal based, low maintenance, and easy to monitor. And periodically review and trim the fat. And if you feel lost, don't hesitate to consult a CFP, because investing is not about owning the most funds, it's about owning the right ones. So, do you need help decluttering your portfolio and building a smart strategy? Then click the link in the description to book your free consultation with one of our certified financial planner today. Like, share, and follow for more practical investment advice without the jargon. Thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.